Would $50,000 to $500,000 of business funding help you in your business? What if you could get this capital at a 0% interest rate? Well, Patrick Pychynski is helping investors and business owners do just that. Patrick Pychynski is the founder of Stacking Capital, and he's the go-to expert for entrepreneurs and investors looking to unlock massive 0% interest funding without drowning in high interest rate debt. Now, Patrick and I discussed some of these strategies, one, whether or not it's legal or not, but beyond that, to understand how business owners can employ this strategy for their investing needs. So whether you need capital today or just want to learn more about the different strategies that are available, you want to check out our conversation right here on Multifamily Insights. When you think you found a great deal, asking the right questions could be the difference in finding a stud or a dud. Listen, we've put together a new guide to help you out. It's called 7 Questions You Must Ask Before Investing in Apartments. Now, in this guide, you're going to learn how to uncover red flags, quickly identify underwriting risk, vet sponsors and team members, and confirm key assumptions. Now, this is a guide that's going to help you be a better investor, whether you're an active investor or you're a passive investor looking to partner with other operators. Asking better questions is the key to identifying great opportunities. So download this free guide, go to our website, casmoncapital.com/7 questions. That's the number 7 questions. And you can access this free guide today. To make it easy on you though, we've put a link in our show notes. So you go to the show notes, you can click that link and access the guide right now. This guide's going to help you make better investment choices, asking the right questions to build your portfolio. So be sure to download it today. Now, Patrick Pychynski is the founder of Stacking Capital, is the go-to expert for entrepreneurs who want to unlock massive 0% interest funding without drowning in high interest debt. Now, he helps established business owners secure $50,000 to $500,000 in funding so they can scale without risking their financial future. Let's welcome to the show, Patrick Pychynski.
Thank you, John. Thank you for having me. And before we begin, I want to take a second to acknowledge you and just let your listeners know, hey, just take a second to review, give it a thumbs up, and give the praise that John deserves here for this show. So thank you for the content that you provide here, John.
Hey, man, I appreciate it. Let's help someone else in the process, right? I mean, it doesn't cost you anything to hit the thumbs up button or to leave a review. And if you got some value, not just with me, but anybody creating content, let us hear about it. It helps us tremendously. Patrick, with all that said, man, I read a couple lines of your bio, but, I know there's so much more. Why don't you take 2 minutes and fill in some of those gaps?
Sure. Well, what we do is pretty simple. We help business owners and investors access capital anywhere between 50 all the way up to $500,000. We always talk about the 3 C's that we can leverage. Could be credit, cash flow, or collateral. We focus a lot on the 0% interest funding, which mainly leverages your credit. There's many ways to fund a deal in the real estate space, but one of the good ways is using 0% interest capital. I hear real estate investors all the time say, I'd do more deals if I had more capital, right? So having access to money and the right kind of money is important. And it's not meant to replace one or the other. It's actually just meant to supplement all the other financing options you might have available to you. So I've been doing this since 2021, around the pandemic time. I don't know if you remember an app called Clubhouse.
Of course.
So
that's the first time I've heard Clubhouse mentioned in about 9 months, man.
So yeah, back then it was the thing, right? Like you needed to know somebody that knew somebody that knew somebody to get in. And then it was just a fly on the wall. And in one of those conversations, they started talking about business credit. And it just blew my mind, sent me down the rabbit hole, started buying courses, experimenting on myself. It blew my mind because it's now, I see this on a daily basis now, but that was me at one point where I had a business doing $2 million a year in revenue. And not once did I ever have any sort of business credit line, loan, or anything. And I was in a pretty tough business too. I was in the metal recycling business and I was young, right? I was like in my early 20s, but I could never comprehend like, how do these people like buy new trucks and have these $100,000 scales? Well, they sure as hell wasn't doing it with their own money. They were using the bank's money or other people's money to do that with. And a lot of that The foundation is your personal FICO score. So a lot of what we do here in terms of 0% funding, generally all you're really needing is a strong credit score of like a 700 plus. Obviously, the more age and the better your comparable credit is. So like the limits on your revolving side, on the personal side, if you have high limits and you've had them for a while, you can generally unlock anywhere between 5 to 6 figures of 0% capital.
Yeah, man. So let's talk about this. First of all, before we dive into it, right, let me replay what I heard you say. So going back to, coming out of COVID era, 2021, you're on Clubhouse, listen to everybody talk about different strategies, and you learn about these strategies to go out there and build up business credit. You experiment with yourself, learn some ways to tap into this, primarily leveraging your own personal credit score, your FICO score, and use that strategy. And today you help others kind of do the same. So many of our listeners recognize that, hey, you're going to have limitations when you're investing based on how much money you have saved. That was a challenge I faced starting out, right? Because that's what I thought you had to do. You save money. Once you have enough money saved, you go buy a property and you start all over. And I was on that hamster wheel for years until I remember I bought an 8-unit building. My wife and I bought this property. The down payment was like $130,000. And we're making good money, but not like, a crazy amount of money. So to save $130,000, and we just had our second child, we made that investment. And I remember just thinking like, oh my gosh, how long is it going to take me to save this kind of money again to buy another property? And that's what warmed me up to say, you know what, there's got to be a different way. And that warmed me up to OPM and raising capital and working with other investors. And it's one of the things I know a lot of our listeners deal with. What you're talking about is a little bit of a different approach, though, because if you could access $50,000, $250,000, $500,000, that could really give you more flexibility to go out there and find investment opportunities. But it feels like there's a catch, especially when you say 0% interest rate and all. Like that just sounds too good to be true, right? So let's level set so we don't lose people. Like, talk to us about some of the challenges, maybe the box. Who is this for, and who is it not for?
I love it. Yeah. So basically what this is are 0% interest business credit cards. So they could range anywhere from an intro period of anywhere between 6 months all the way up to 18 months. If done correctly, though, this process could be repeated. So you could go on to have 0% for years, essentially. But the most important part is that these business credit cards, about 95% of them will not report on your personal credit. And during that 0% intro rate period, you're looking at about 1 to 1.5% to service the minimum payment on that balance. So those are just some of the benefits there. I see a lot of real estate investors, they have a lot on their personal credit profile, which is a good thing over time because they have lots of mortgages on there, typically lots and lots and lots of different accounts on there. Over time, once that ages is really good. But oftentimes real estate investors come to us and they end up with a stronger credit score and business funding on the other end when we're done with them. Because what I see a lot is a lot of real estate investors will put stuff on their personal side. So their debt to income is high. They have a lot of inquiries on their credit report. They also have maybe a lot of revolving debt, whether it's they're putting some of the renovation costs on there or whatever it might be on their personal credit cards. And your utilization accounts for 30% of your FICO score. So you see a lot of real estate investors that are constantly fluctuating and they can't get access to more capital, at least from the banks, because everything is being put on their personal side. So not only do we help sort of keep that goose that lays the golden egg, just leave it as something that we leverage, the personal stuff, we help move them over to the business side where all that stuff can be hidden. And it should really be on the business side if you're investing or doing any kind of business, and then setting them up for it. You said, what's the catch? Well, the catch is it's short-term financing. So you have this for 12 months to 18 months. After that, the intro rate can turn to, depending on where your credit's at, anywhere between 18 to 25%, right? But the idea here, especially with real estate investors, is you're going in with a plan and an exit strategy. So whether it's buying and holding and refinancing or buying and flipping. Typically 0% money, what we've found, tends to be a good add-on to like hard money to either help with down payments, to help with renovation costs, and virtually anything. So the other catch here would be that often comes up is like, well, these are credit cards. How am I going to use it for like a down payment, for example? Um, well, there are services that will liquidate your credit card into cash. Now, you will incur about a 3% fee with those services, sometimes even 6%, depending on who you go with. But what this allows you to do is retain the 0% intro period and not tack on that cash advance APR fee that they give you. Usually when you do that, you lose that 0% intro promo. So this allows you to pretty much liquidate the credit into cash, incur only a 3% fee, write that off on your taxes, and effectively pay whichever vendor via check or wire. One of those services is called Plastique. I'm not sure if you've heard of them or not.
Oh, no. There are a couple things, you hit on, right? So first of all, you mentioned that this is really short-term financing. So this is not a strategy you want to use if buy a property, hold it for 5 years. Like you have to have some plan to either refinance or to exit out of the short-term financing. But there are a lot of options there. These are credit cards. You mentioned that there's a company that can essentially help you liquidate the credit card. You may have to pay a 3 to 6% fee on that, but that gives you the access to the capital to go out there and to invest. I know our listeners probably are going through a few different questions, so I'm going to ask a handful of questions in a relatively quick manner just to make sure we address those things. One, is this legal? Feels like a lot of jumping through hoops and no one wants to go to prison. So is this legal?
I love that. That's a great question. Is it legal? Yes. Do the banks want you to know about it? No. So, obviously it's like with anybody, right? Nobody wants to be third or fourth in line. So the way we're able to actually get that amount in such a quick amount of time is that we're doing this all in a short time span. For the listeners that know or don't know, we have three main credit bureaus out there that make up our credit score: Experian, Equifax, TransUnion. So what we typically do is go for anywhere between 2 to 3 applications per bureau. And when we're done, because they're business credit cards, we're removing the inquiries. And essentially all you have left is business credit cards that do not report on the personal side.
All right. I love that. Appreciate that clarification. And then the second is, what investing strategies pair best with this financing strategy?
I've seen all kinds, honestly. I would say because here's the thing, even during that, let's say 12-month intro period for your 0%, if you handle that debt well, you make your payments on time, and you have, by the time that intro rate runs out, less than 45% utilization on that line. Over time, that line, if you're using it and paying it down, has probably grown past its original limit. And you can also ask for another 0% card from that same bank. And a lot of times, like I'll give you an example with Chase, it happens a lot, whether the client already has a Chase card coming in with us prior, or they're coming up on their second round with us where they got a card from us a year ago, it's running out. We're able to just go apply for another card. And with Chase, they actually have it to where we can move the balances from that old non-0% card to the new one. So again, these cards not only, they continue to grow with you, and you can continue to repeat the process if done well. So I would say anything that fits within that exit strategy, it's short-term capital. It's meant to get that project going, and then hopefully down the road, maybe refinance it into a product that's really more meant for longer term, and for that specific product or asset.
So that was
As
actually
well.
what I was going to ask as the next question, right? It's like, so what happens after that? So you open up these credit cards. Do you now have to keep these credit cards? Do you close the accounts? Like, what does that look like?
So I always say you want to keep them open. Number one, those are business financial trade lines that will go on to report on the business credit bureaus. So, there's so many other sort of hidden benefits that we probably won't have time to get into, right? But
No.
they are financial trade lines. They help your business look good if you obviously use them correctly. They continue to grow with you, and think of it as like a line of credit, right? You're only paying on what you use. So it doesn't necessarily, a lot of these don't have an annual fee. So it doesn't, it hurts you more to close them than to keep them open.
Yeah, no,
Because
I
those are
appreciate that, right? Yeah, yeah.
yeah,
So
at the
so
end
to
of the
your
day, those are relationships that you have open as well. You want to think of it that way.
That's a good way to put it, right? Because I think a lot of people maybe would think of this as kind of, yeah, a very transactional, like, oh, okay, here's a way to tap into $100,000 and get a line of credit essentially to go out and do these deals. And what you're saying is that yes, that's part of it, but the other part of it is you are building these relationships with these banks, with these, credit card holders, and you can leverage that to establish business credit and give you more flexibility to do deals moving forward, as opposed to simply trying to liquidate this credit card so you can go out there and buy a deal. I know that you've got this vision. You talk about kind of creating a seven-figure growth machine. Can you elaborate a little bit more on that?
Yeah, over the past year, we've invested heavily into our team, into training, hiring, and even software. So to help not only our side become smoother, but also ultimately to just be able to help more people. And all this started because I've been on that other side. I've bought the courses, I've spent $10,000 on masterminds, I've watched outdated YouTube advice. I've I've bought in to the wrong funding companies or mentors, and it just ended up slowing me down. So all this is done with that in mind. And what we do now is like your listeners here, we actually have a software that can do a business scan, and it will literally tell you what is in compliance and out of compliance on your business. What are the things you might need to improve on your personal credit? And also, what is the immediate financing that you might be able to unlock? We have about 20 different programs, all from like 0% cards to revenue based lines of credit, real estate loans, equipment loans, SBA. Those are all what fit into what we call immediate financing or non bankable financing products. And we understand that, like the 0%, even though it can be repeated, ultimately, this is a form of short term capital. The fact is that most businesses are not bankable. So that's why we have to resort to these programs. That's why you see a big emergence in fintech and those types of loan programs as well, because that's also short term financing. Our ultimate goal is to get a business bankable. So we start to actually educate them on that process after we go through a round of funding and tell them, hey, at some point you want to be bankable. Over 90% of businesses, when they go apply for a loan at the bank, they're denied for it. And the reason being, a lot of times, is not because of their credit, it's because of a lender compliance. So it could be something as simple as just having a home address, right? Or a non commercial address that makes that business non-compliant. And the reason it's getting denied is because all this bank is doing is wrapping your loan up and reselling it on the market, right? But they can't do that if that paper isn't compliant. And that's why 90% of the time you're getting denied, and you're getting denied before they even pull your credit report. Because every time they have to do that, they have to pay Experian or Equifax to do that. So they have a very similar software like the one we have, even much more comprehensive, that does a scan on the business, does a scan on that person's information. They have so much data out on you nowadays that they could pretty much disqualify you before even running a credit report. And it
Yeah.
boils down to those lender compliance items that our software can take care of. And within a few minutes, you can know without even talking to a rep where your business stands.
No, I love that. And that's available on your website, stackingsuccess.com. So we'll put a link to that in the show notes. And the thing, as we've talked more, the thing that's interesting to me is, there are people who look at this as just a quick access to capital, right? To be able to go out there and access 50,000 to $500,000. And that's certainly a part of it. But what you talked about just now was really positioning your company so that your business is bankable. And I think that's an important distinction in how to approach it. Because yes, you can go get credit cards and access capital and go out there and do whatever.
But you're talking about really just professionalizing the business, right? Doing the scan, take a look at, maybe where you're not compliant, but then also trying to get your business to where it is bankable. And the examples you use are like, I don't want to say real businesses, but businesses that have inventory, businesses that are looking to grow and looking to make investments, and you may not qualify for a traditional bank loan. So this is a tool or a strategy that can help get you the access to capital you need to grow. As a quick little sidebar, man, I remember I flipped two properties. It went horribly wrong. But I remember when I did the first one, there was another guy who partnered with the same developer, and they used some of this strategy. They had these credit cards, and I didn't get it at the time. They were like, no, you just open up a business account and you get these credit cards and they give you this money. And that's what they did. And they got like $50,000 with like, five different business cards, and they went out. And
Wow.
I guess, I don't know. I know their deal didn't work out. My deal did. Nobody who worked with this developer, we all failed. What happens after that, right? So you've opened up these accounts. Obviously, if everything goes great, you pay it off. You've got these credit cards with these credit limits. It looks great in your credit report. What happens if things don't work out? Like, I know you use your personal credit to open these accounts. Does that take a hit on your personal account? What happens with the business? Tell us a little bit more about kind of the risk or what the exposure is there. That's a great question. So yeah, these cards, as I mentioned earlier, about 95% of them won't report on your personal credit. However, if you do start to default on the card, some cards have even started to report if you're late on them, they will start to report on the personal side. So it's very important that whatever you did to get you there to that point, to be able to get you business credit cards, that you keep up that same discipline and make sure you're able to service it. And that's one of the things a lot of people come to us for credit, but we actually turn away a lot of people because like their problem isn't necessarily credit. Their problem is cash flow. So I tell people all the time, like cash flow is king. Credit's really just here to leverage a good proof of concept. That's a great distinction, right? Is your problem a credit problem or is it a cash flow problem? If you're not cash flowing, having more access to credit is not going to fix it, right? You got to have a viable product or service, not
Ideally,
necessarily
right?
just more access to capital. Yeah, there's just more money to burn through.
Otherwise,
Yeah, I mean, think about it. Life is risky enough as it is. Yeah, I mean, and in business, it's the same thing. And I think one of the ways to sort of minimize that is by getting a good proof of concept first and then going all in with credit, leveraging it. That's all credit is leverage, right? Yeah, absolutely. Patrick, you mentioned just kind of your trials and tribulations, really learning this space, right? Working with different mentors, looking at different YouTube videos and programs. For someone who is intrigued by this conversation and wants to be able to access more capital, what questions should they be asking to make sure they avoid maybe some of the downfalls that you experienced? Well, so there's a lot of companies. We're fortunate enough to have an advisory firm that can consult these people all the way through, no matter where they're starting. And we can also, because of our software, not have to charge anything on the front end and then just charge a success fee on the back end. That is for those that are ready, right? So a lot of times these companies, they just want a performance fee. So you might be not necessarily ready, but they know they're going to get you something. They might get you some $2,000 starting card limits, right? They're going to go for it anyways because they're still getting a 10 to 20%. Some of these guys are charging ridiculous rates too. So look out for that too. Anybody charging more than a 10% success rate, I would say, has no idea what they're doing. But yeah, so I see that over and over again. They're doing that, and then they continue to do it. So like they get a $2,000 approval from Amex, and then they still go for another one. So it's like you literally just burnt all your 0% cards. You have $4,000. Congrats. And then what's the next step? Well, it doesn't matter because they're gone. They got paid and then they were ghosted. Then the other things I see too is and then this unfortunately is like people that come from other funding companies, and it's a little bit too late at that point to do something right there and then. We have the plan, but most people are not patient enough for that. But is just opening up too many recent accounts on the personal credit. So, again, especially if you're thinking about business, do the business first, because we can always remove those inquiries. And if there's something you want to do on the personal, then you can kind of do it strategically. I would always still not go crazy on it. There's no reason really to do that on your personal credit profile. Most people, I noticed like real estate investors, they're like in their 40s, 50s. They've, again, got a thick profile. They're asset rich. They're doing good. Their credit is usually in the 700s because they just haven't put a lot of focus into it. But usually with a little optimization, like them knowing when their closing statement dates are for the reporting utilization, removing old inquiries, we can get them up in the high 700s, 800s. And from there, really, the only thing they should be adding to their accounts is maybe like a new car or like a travel card, like a niche travel card that we're looking for specifically. Other than that, most credit cards should really be on the business side or any kind of funding.
No, I love that. It's really good information. I think it's helpful for a lot of folks. If you want to learn more, go to stackingsuccess.com. We'll make sure we put a link to that in our show notes. Patrick, right now we're going to transition and go to our round of insights.
They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmoncapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmoncapital.com and click on the Mastermind button today.
Give me a failure or an apparent failure that set you up for later success.
There's so many of them, but I would say, I'll continue on to, I did start by mentioning I had a scrap metal recycling yard. I was really young. So really quick, at the time, I knew nothing about credit, but there was a metal recycling yard in Virginia that I had been doing a lot of business with. They had extended me a $20,000 sort of like working line of credit. So I had already done about $250,000 worth of business, sending 18-wheelers to them worth of material. About a couple months in, they telling me, well, remember the 20,000 that we sent you through wire? Yeah. Well, your next load come in, we'll need you to sign the paperwork, the contract for that. So I'm like, okay, no problem. I signed the contract. I'm young, whatever, right? And don't think anything of it. A few months go down the road. Commodities take a crash. This was around, I don't remember now, like maybe 2010 or something. Copper, palladium, platinum, everything's taking a crash. Expenses are still through the roof. I have no credit, no working capital, nothing. So I literally open up a can of worms and tell them, if you were to ask me for all the money right now, I can't. I'm currently liquidating, downsizing. And sure enough, that opened up the can of worms, because in the contract, there was something about if they were to ask for the money and I didn't have it within 24 hours, it would be deemed a felony. So sure enough, yeah, it was the weirdest case ever. It was in a small town. I hired a big lawyer from a bigger city in Virginia. And he's like, the fact that the DA took not only your case, but like 4 similar ones from this company is really weird. And had me in jail for 30 days on a no bond governor's warrant, something like that.
Wow.
This company had a lot of influence in that town because of the revenue that it brought in. So that was a very game-changing moment for me, because number one, I got to read, it's actually there, Awaken the Giant Within. It's got my last name written on it because it was in jail. And from there, it was just a big mind shift, I would say, really more of like a reawakening of having to go through that. But it's really mind-blowing, and I bring this one up because had I known what I know now, I would have never went to jail. I would have just gotten a $20,000 credit card approval, and my payment on that would have been like $200 a month. That's it. So it's interesting how like this would have actually not put me in jail, but at the same time, I guess this is where I ended up. So sorry,
I appreciate you sharing that. No, I think it's helpful just to understand the context of it. So I appreciate you sharing a little bit about your journey there. Give me a digital or mobile resource you recommend for our listeners.
Did you like a book or something, or?
So like an application or something, a website that you use, something like that.
Well, it doesn't have to be related to
no, it could be a phone app, could be anything. Yep.
Yeah. Well, one of the good ones for me was 75 Hard. It's I think it's like $6. It's the challenge itself is free. You can sign up for it.
75 hard it is. All right, speaking of books, give me the book you've recommended or gifted the most in the last year.
Think and Grow Rich for both.
Awesome. Great book. All right. Give me a daily habit that helps you stay focused on your goals.
First thing I do in the morning is go run. I just get up, put my shoes on and go run. And in that, I take care of a lot of things, just praying to God or having a conversation with him, deep, big breathing, getting your sun in, getting the stretches in, get moving. There's so much that gets done without you realizing it when you just start moving your body and get some sweat going.
Give me your number one insight for accessing business credit.
Number one insights. Your personal credit is key. Keep it above a 700 and don't get any derogatories.
There you go.
And everyone always gets a second chance. If this is America, everyone always gets another chance, let's just say that way, with their credit.
There you go. All right, let's lighten the mood. You are out there in Florida, West Palm Beach area. Give us your favorite place to grab a bite to eat.
Oh man, there's a place I can't think of the name right now, but it's a fusion of Dominican and sushi. So I've really been liking that place because they've got Dominican sushi rolls.
All right. Well, text us to us when you remember the name, and we'll put that in the show notes.
Coco Cabana, I think, maybe something like that.
All right, Coco Cabana. All right, sounds interesting for sure. Well, Patrick, you gave us a lot of great insights. I appreciate you sharing a little bit more about this space because it's a concept I had heard about, but I love the way you kind of framed it up because it's not just, hey, access to capital and who cares, let's run away. It's really about how do you get your business bankable? And there's a step to go out there, access credit cards, to get access to some of the capital that you may need to grow your business or to get some investments going. But the goal should really be about making your business bankable for the long run, not just access to a little bit of capital today. And you talked about some of the strategies there, making sure you take care of your personal credit, making sure that you're working with people who understand how to navigate this system, but then also making sure that you're doing a business scan of what your company is doing now so that you can stay in compliance. Again, for folks that want to learn more, they can check out your website, stackingsuccess.com, and they can get that free scan of their own business before you have to talk to somebody. I just think it's really important for us to understand just some of the different tools in a tool belt. Maybe this is something you never need. Maybe this comes in handy if you find yourself in a situation where you need access to capital. But as investors, we always need to know what our options are. The more options you have, the more opportunities you have to get a deal done. Patrick, thanks again for coming on the show today, being a great guest. We look forward to staying in touch with you, and I hope you have a great day.